In the 1500s, many European countries were establishing their own seafaring trade routes to the Far East to pick up spices and other goods to trade. The Dutch were among the seafaring countries trying to establish dominance along with the English and the Spanish. Now, individual Dutch merchants were competing with each other, sending out seafaring expeditions. A lot of them didn't make it back. It was a tough business. Now, the Dutch government realized soon there was no way to establish themselves as a dominant trading force in such a scattershot way. So, in 1602, under the direction of the leader of the Dutch Republic, the Dutch organized all the independent Dutch companies into one group that would later become known as the Dutch East India Company. Now, the Dutch gave this company lots of autonomy, including a monopoly on trading, the ability to create its own army and declare war, and unfortunately to enforce slavery. But to do all this, the Dutch East India Company needed lots of money that they did not have. So the Dutch came up with a very clever solution. They created a trading house in Amsterdam where any Dutch citizen could come and buy shares of the Dutch East India Company in exchange for a share of its profits in the future. So why am I telling you all this? Because what the Dutch did was create the very first stock exchange. And buying shares of the Dutch East India Company, well, that was the first stock. This is Sunday Money. So what is a stock? Well, let's just keep this super simple. A stock is simply you buying a little piece of a company. When you buy a stock in, say, Apple or Google, congratulations, you own a small piece of that company. Okay, so that's great. So how do you make money in stocks? Well, there's many ways to make money in stocks, but let's just talk about the two ways that pretty much everyone knows about. The price of the stock goes up. Your stock is worth more, you sell the stock at a higher price, and you make some money. But what makes the price of a stock go up? Okay, so let's play a little game. Noah's pencil business is doing fantastic, and Eli's lumber company is doing great, supplying all the lumber needed to make Noah's pencils. So Eli has an idea. Instead of just selling lumber to Noah's pencil company, what if he actually owned Noah's pencil company? Now Eli asks Noah if he can buy his pencil business. Now Noah is not quite ready to give up on his life's dream, but he says, you know what? If you're willing to pay me $1 million for my business, I'll find some other dream. Now Eli agrees to the deal, but he does not have $1 million. So Eli needs to get some money. Now Eli could go to the Bank of Crystal and try to get a loan to buy Noah's pencil company, but that means he'll have an extra $1 million loan with interest payments. Now he could do that, and by the way, that's called debt financing. It just means you're going to get a loan to buy something. But there's another way Eli could get some money to buy Noah's pencil business. Eli could sell shares of his company to private investors. That's called private equity. Or he could sell shares of his company to the general public, and that's called going public. And unlike getting a loan from the Bank of Crystal, there is no loan to pay back. In fact, there's no obligation to pay anyone back when you sell shares of stock in your company. Of course, there's a trade-off. Eli's literally selling some of his company to make this happen. Now, we'll have a separate episode to discuss what happens when your company has shareholders that all own a little bit of your company. But for now, let's just say Eli decides to sell shares of his company to the general public. He goes public. Now, Eli creates 10,000 shares of stock for $100 each. And on opening day of Eli's stock trading, he does it. He sells all 10,000 shares. Now that is awesome. Eli has the money he needs to buy Noah's pencil business, and he does just that. He buys it. By owning Noah's pencil company, the cost of making Noah's pencils goes down. Eli doesn't have to sell the lumber to Noah's pencil company. Eli owns the company. Profits start to go way up. Now there's a bunch of other people out there that say, hey, I want in on this action. I want to buy some ELC stock. But there's only 10,000 shares of stock out there, and they've all been sold. So how do I get some ELC stock? And that's what happens at a stock exchange. Those people that own ELC stock paid $100 per share. So naturally, they would like to make some money if they decide to sell some of their shares, right? So some of the ELC shareholders agreed to sell their stock at $120 per share, which means they make $20 per share. And as those available shares get bought up, some others might jump in and want to buy that stock, which will continue to drive up the cost of the stock. Now, does that make sense? This is how the entire stock system works. High demand for the stock, limited supply, higher cost. Remember, any stock can just as easily go down in price, so be careful what you buy. Now here's the other commonly known way to make money in stocks. Some companies provide incentives for you to not only buy their stocks, but to hold on to it for a long time. And that incentive is, of course, money. This is called offering dividends. And dividends can look a little bit like interest, and in some ways they are. You can think of it this way. Some stocks you just buy, and if the price of the stock goes up, you sell the stock and make some money. If the price of the stock goes down, you lose some money. But other stocks add a little bonus on the side. They might say, hey, if you buy our stock, we will offer you a cash dividend of, say, $1 per share. Now that means they will pay you an extra $1 for every share of ELC stock you own. Or they could offer a stock dividend. For example, a 5% stock dividend works much like an interest payment. The shareholder will get another 5% worth of stock for every share they own. Now, there are many more ways you can make money in the stock market, which we'll talk about in other episodes, but this is just the basics. All right, so that's what a stock is. Now, good luck, and remember, you'll have a lot of worries in your life, but money should not be one of them. See you Wednesday for the deep dive.